Income Tax 2020. Adjustments to Income Overview. Come in, relax with Income Tax 2020. Adjustments to income. When thinking about our income tax equation, we're basically going to be here on the second line, remembering that we could basically break the income tax equation into two separate halves. The first half basically being a modified income statement for tax purposes. The second half then being the calculation of the tax and application of payments and credits to then get to the bottom line, that being the taxable refund or the amount due. We're focused basically up top here on the modified income statement. In a prior section, we talked about what would be included in income and what would not be included in income. Now we're basically talking about the deductions side of things at this point in time. When thinking about the deductions, you kind of break them out into two categories and then like a subcategory. So we have these deductions, which have the name can kind of change over time, but we can call them above the line deductions, adjustments for adjusted gross income, adjustments for AGI, or adjustments to income, versus the ones that are going to be down here, kind of below the line deductions, often called, and those would include the greater of either the standard deductions or the itemized deductions. Now, the most common deductions that people think of when they start to just think of deductions, if you have people just rattle off deductions, then they're probably thinking about itemized deductions down here, which you only get if you have itemized deductions greater than the standard deduction. These deductions up top, above the line deductions, are going to be those that can be gotten by anybody. So these are kind of really valuable deductions if they can be taken, because again, they don't have that kind of threshold of first needing to be able to itemize, meaning having itemized deductions greater than the standard deduction. Now, the reason the name kind of changes up top, one, you can kind of think of them as above the line being basically the adjusted gross income. The adjusted gross income is a really important number because many times when you're talking about phase outs, if you're trying to think about a credit, whether or not you get to take the credit or something like that, many deductions have phase outs as income goes up, meaning you lose the deduction or credit as your income rises. Then it's often not based on income in terms of the top line income line item, but rather on this adjusted gross income. So this number we don't think about as the bottom line taxable income. It's not like net income on an income statement. It's kind of like a subcategory along the way to get to the bottom line number, in a similar way as like gross profit is a subcategory to get down to net income on basically a standard type of income statement. Now, there's various reasons why the name for these deductions are going to basically differ over time. One is because the tax returns have differed over time, such as where this deduction will be, or some of the formatting or reporting of it has changed. In other words, instead of being on the actual 1040, for now they're on Schedule 1, which is going to be an attachment. So you might hear them, if that continues, to now be called Schedule 1 deductions. Sometimes they're called above the line deductions, because they're above the adjusted gross income line as opposed to the below the line deductions, which would be the standard deduction or itemized deductions. That's kind of a quick way to say, to be able to refer to them, above the line, below the line. I think that's the shortest way to basically refer to them. Although now you have Schedule 1 deductions, which might be the shortest way to refer to them, but it hasn't, I don't think that's quite taken hold yet, especially since we don't know what's going to happen in the future, whether they're going to keep the Schedule 1 or not. Note that there also could be called deductions for adjusted gross income. So you could call them adjustments for, in other words, they're adjustments in order to get to the subtotal of adjusted gross incomes, kind of like cost of goods sold is an adjustment to get to the gross profit. So these are adjustments for adjusted gross income. Or now we can call them adjustments to income, meaning you're kind of thinking about these as modifications of the income in that way. And notice, if you think about that, it's basically the same thing. If you take something that's included in income up top, and you basically say, well, now I'm going to have another line underneath it that's going to say, this is something I'm going to basically exclude from income, take it back out of income to get to the adjusted gross income. That's basically the same thing as saying, I have the income line up top, and I'm going to deduct something to get to basically the adjusted gross income. The reason we kind of like calling it adjustments to income is because some line items that are included here are basically things that are kind of simulating what might happen on a W-2. For example, if you're talking about retirement plans, if you had a 401k plan, then it's something that's going to be pulled out of the W-2 automatically, and therefore it won't be included in income at all because box 1 of the W-2 will not have any of that in it. and therefore it won't be on the tax return at all. But what if you don't have a 401k with your work? Then they provide you an IRA, individual retirement account option, and that then you can put here, which is basically a deduction, but it works a little bit differently in that you're going to record the income. You might have W-2 income that doesn't have a 401k, and therefore the retirement plan, there's no deduction on box 1. But then you put money into an IRA, which is basically a deduction, or if you want to think about it as similar to what would happen basically if it were a W-2, you can call it like an adjustment to income. So you had income, but now you have an adjustment to income, kind of mirroring what would happen on the W-2. So you can call these adjustments to income. So again, the name of this line can be confusing. It can change over time. I think above the line deduction is like the shortest way to name it, and probably something that most people will know. And maybe Schedule 1 deduction will kind of catch on. Adjustments for AGI or adjustments to income are also terms that you can use. Okay, so if we go then to the 1040, then we have the information up top. So for our income information, so here's the total income, and then we have these adjustments. So the adjustments are going to be here, line 10 for 2020 tax form. It'll be similar for 2019, but the line numbers could change. And then we'll support that. We're going to support that with a Schedule 1. Now, the Schedule 1 was an adjustment that was made a couple of years ago. It used to be basically some of these items would be on the first page of a 1040, and you'd have a 1040A and a 1040EZ depending on the complexity of the return. I kind of like the new format personally because it makes sense that everybody just use a 1040 and then you add schedules to it if you need it. So if you have these adjustments, you would add a schedule. Now, many times people won't have a lot of adjustments here for it. So you may not need this schedule all the time, but if you can get one of these adjustments, they're going to be applicable because there's not that itemized deduction limitation for them, although there could be income limitation phase-outs. Notice that this Schedule 1 has both Part 1, additional income, and Part 2, adjustments to income. So the additional income is included up top. We saw that in the prior section. Now we're talking about the adjustments to income, which are going to be down below and feed into basically the above the line deductions. Okay, and so if we look at that in more detail, you can just basically see the list, and you can kind of go through these as you review the tax return and just see if any of these would apply. So you can just kind of list them out, like the educator expenses, very specific type of deduction. It's limited to educators, basically teachers. We'll touch on that later. We'll touch on a lot of these later, or at least the most common one. But let's just read through them now. Certain business expenses of reservists, farming artists, and fee-based government officials. We can attach Form 2106 if that's applicable. Health saving account deduction, so we would attach Form 8889 if applicable. Moving expenses for members of the armed forces, so that's going to be very specific now these days, members of armed forces. Form 3903. Deductible part of self-employment tax, attach Schedule SE, so that would be if you had self-employment income, then you'd have to be dealing with that. That would typically be like a Schedule C possibly, or some other form that has self-employment, possibly it's Schedule E or Schedule F, meaning rental income or possibly farming related income. Self-employment SEP, simple or qualified, or SEP, simple or qualified plans. So now you're talking about plans that are similar to a 401k type plan for self-employed individuals. And then we have the self-employed health insurance deduction. So if you're self-employed then you have this health insurance. And again, we'll talk more about them later. But penalty on early withdrawal of savings. So if you have a penalty, you're going to have that here. And then alimony paid. So we'll get into basically the alimony rules. There's been changes to the alimony rules, meaning alimony divorce or something like in a divorce. One spouse pays the other, not for child support, but for alimony. Can you get a deduction for that? Do you have to record it in income? So there's been changes to those rules in the last couple of years, so you want to be up to date on that. But if you do, you got the Social Security number, who you paid, and so on. And then the IRA deduction, probably the most common one. And if you do taxes, this is the one that's always going to be the last thing that you kind of ask, or one of the last things that you ask, because the IRA deduction is something that you can often put money into up to the point in time that you file the return or the due date of the return, not including extensions. So therefore, when you do the return, often the software will tell you, can you put more money into an IRA? and then you can advise the client to do that. And it's the last little bit of tax planning that you could basically do even after the year had end as you do that process. Notice it's a little bit confusing if the person has like a 401k plan and stuff like that, whether or not they can put money into an IRA. That gets a bit confusing. But the tax software really helps with that, because they can, if you put everything properly into the software, it will help to tell you whether or not they could still qualify to put money into an IRA, and you can advise them to do that even at that point oftentimes, and possibly be able to take advantage of that. So student loan interest deduction. So this is the interest on the student loans. So people have student loans that have been taken out. They're paying back their student loans. The interest on the student loans possibly could be deducted here. There is a phase out for it. Tuition and fees deduction, attached form 8917. Now this one isn't used all the time, because if you have tuition, if you're paying for education, higher education, like college or something, then you're probably going to take a credit. There's 2 credits that are available. So what you basically do is you say, can I qualify for the credit? One of the credits, which is going to be the most beneficial, then the second credit, which will be lesser beneficial if I don't qualify for the first. And if I can't get either of those, typically the last beneficial thing that still may give you some benefit is to deduct it here. So that's why you won't see this here all the time, because people are probably taking advantage of the credit if applicable. So then we would add lines 10 through 21. These are the adjustments to income. Adjustments to income, above the line deductions, Schedule 1 deductions. The deductions that aren't itemized are standardized deductions. Okay.